Good morning, traders. This is Michael coming to you from Game Edge on Wednesday, September 17th. Happy FOMC Day, as well as Vixpiration today. As we head in today, as always, we'll cover our three pillars: sentiment, structure, and trend. Make sure you check us out on X, as we had a couple posts this morning, including part of our SPX game plan, which we'll go over here in a few minutes. And make sure you check us out on YouTube and like and subscribe. You'll be notified when we go live with content. And we'll usually do a midday review of what we're seeing intraday with the price action, obviously FOMC today. And then we do a post-market recap where we go through how we used our tools to navigate the SPX option structure for the day and how we possibly placed any trades for the day. And then obviously a review of our thesis or game plan, and then how the price action played out heading into today. So let's go ahead and start with our trend, which is one of our pillars here based on our market trend model. It's based on the tick index. Quick orientation here. Obviously the bolded white CT is our intraday instantaneous cumulative tick. This is just the indicating of buying versus selling in the market intraday. And then as of yesterday, we saw a recovery of the intraday instantaneous cumulative tick. We placed some shorter term moving averages on here. This is just for a momentum. Understanding if the market is trending up or trending down. Obviously, you want to see the cumulative tick from lower left to upper right. That's indicating more buying in the overall market. And obviously, we'd want to be on the bullish side. If it is trending down from upper left to lower right, obviously that is bearish, indicating more selling in the overall market. So we did see a slight recovery towards the end of the day yesterday. Obviously, SPX, the price action, the screen was continuing sideways. So we'll see how this plays out today. Obviously, heading into FOMC, we basically anticipate this morning to be flat after morning price action and movement of the opening orders as they clear the book, and then heading into the decision. The lower area here, this is our colored ribbon. This is our longer look back period, how we position money for a little bit longer term. Obviously, if the red is above cyan and a positive slope, that's indicating we're in a significant uptrend in the overall market, and we want to continue in that direction. So now we've just seen multiple days of consolidation as we head in to the decision today. So we're at a point where we could go either direction. Obviously, we could move up or we could move down, depending on how the market digests what news it encounters today. Looking at the tick RC, again, this is kind of our quality tick. Again, this is how we base our mechanical portfolio P-trans to PX on. As long as we're above the colored ribbon, and obviously the colored ribbon has a positive slope, the red above cyan, then we continue to enter positions mechanically. But as with the other tick that we just saw, we're just continuing sideways in a consolidation pattern. So this allows us to continue to enter positions if we get indications via our scanners, and basically our portfolio is close to full. We closed 2 Tesla positions yesterday for significant gains, which was great. So we'll continue to monitor this overall tick and the market trend model for us moving forward after the news and decision today, and as we head into the monthly OPEX on Friday. All right, let's get into the overall structure and sentiment. This is the SPX options market. We separate the SPX-A from the SPX-P. The SPX-A are what we call our cruise ships. These are larger institutions or market participants. These contracts don't turn over as rapidly as the SPXP, as you'll notice by the web app and our expiry tiles here. Obviously, this is the monthly expiry heading into 9/19. We continue to see green net delta above and below spot price. So this is bullish. Right-hand plane, which is above spot price. Left-hand plane below spot price, and we see the transition levels here. Key levels we want to stay above for the overall bulls, but any pullback, again, is an opportunity to get involved in the market as long as we stay call dominated within the overall institution. So we'll see after this expiry on out in time if this structure changes any. Anticipation is right now it doesn't look like it's going to change. We have a few other tools that run on the SPX-A that we discuss with our members in our Discord, so make sure you come check those out. Again, 14-day free trial, all the tools turned on. But as of now, bullish overall structure from institutions and larger market participants as we head into the end of the month. SPXP, obviously this is our speedboats. As you notice over here in the web app, these tiles are 0 DTE as well as weekly. You can pick as many as these or as least of these as you want to move through the expiries. So heading into today, we are call dominated above and below spot price. Transition here at 6,600 is the DEX transition, GEX transition 6,610. We closed right at the top of that transition there. We see the JPM short strike indicated down here at 65.05, 6,500, 65.05, and then 6,700 to the upside. This is what we call our PGEX or COI. This is the highest call open interest. Again, that would be an upside target if we can get price moving in that overall direction. Obviously, significantly higher than where spot price is today, and probably not anticipating us to move there unless we have a large positive response in the overall market from the news today. So quick takeaway is call dominated above and below spot price. Net delta is green, so any pullback should be an opportunity to get involved in the market at this time. All right, moving on to what we call the GEX ratio, or our gamma edge ratio for the SPXP. As we discussed, as long as we're above that 1 with the red dotted line, that means call speculators, call dominated, are still in overall control. As I spoke yesterday, the main thing we wanted to look for was a divergence. So that would be SPX price moving higher and then the overall GEX ratio moving lower. What does that indicate? That indicates that short dated call gamma is leaving the overall complex, either via mechanical closing or without the opening of out of the money call speculation above spot price. So then that would expose in the money puts above us. Also, this can be changed as it's spot price sensitive as we move up and down the structure with out of the money puts opening below spot price, and that would be overriding the in the money calls below spot price. So again, we're seeing a divergence, even though we saw a slight pullback in SPX yesterday, a significant drop in the GEX ratio. So again, this is a cautionary flag, as we'll indicate, take this with all the other tools and metrics. So this is obviously just a feather in our cap saying this could be a slight overall bearish look, but just cautionary at the moment as we're above 1. So call speculators are still in control, and we give the benefit of the doubt to the bulls until this drops below 1. So we'll continue to monitor that day over day. All right, looking at the SPXP delta balance. So again, we separate those price action planes, the SPX structure above spot price and below spot price. So the red is the below spot price. So that would include your in the money calls as well as out of the money put hedging. And the green dotted line would be the right-hand plane above spot price. So those would include your out-of-the-money calls and in-the-money puts. As we've seen really the past few days, we've seen this green dotted line continue on a negative slope, still above 0 though, but just slightly declining. So again, this is your out-of-the-money call speculation indication that continues to degrade, and you saw that with the GEX ratio in the previous slide. So obviously those two are matching. Obviously these are spot price sensitive also. So if we continue down the overall SPX structure, you remove the out of the money speculation as we move SPX down, and you can capture some more of those out of the money puts, again changing the overall ratio. The left hand plane continues in a positive slope. So again, the in the money calls are still entrenched extremely well. So that's why we continue to say that will be supportive on any pullback. And the delta balance sitting at 1, still indicating call speculators are maintaining overall control, and we give benefit of the doubt to the bulls again until any of this drops below 0, which would include the delta balance as well as the left hand plane and the right hand plane. So projection on out in time with the expiries, again we're staying above 0, so again that is overall bullish. Again, call speculators maintaining control, so you see that recovery in the out of the money call speculation in the right hand plane, but then you see the in the money calls drop slightly. And then when you aggregate those together, still the delta balance is at 1, so indicating call speculators are still in control. So we'll watch this day over day as we head into the monthly expiry, and then after today, see if there's any significant change in the delta balance, as well as the GEX ratio, and then the overall sentiment and structure. All right, let's look at the SPXP. This is our net stack command. Again, this indicates the highest sensitivity areas or strikes for today. Again, call dominated, a left-hand plane in the money calls 65.50, out of the money calls 66.20, and then the charm levels that will be important today, fairly balanced there. As long as we're above or below each one of these, this will continue to be supportive. This will continue to be a headwind. And you really do see the left-hand plane integral outpacing the right-hand plane pretty significantly. So again, any pullback, as long as we're above 65.50, should be supportive with these in-the-money calls. And then you see the gamma sensitivity levels fairly balanced again. And then the net Vanna, again, fairly balanced as we head into today. So basically, this is just indicating everybody's waiting in an overall waiting pattern for the news, and then determine direction as well as speculation within the overall market. All right, SPXP 0DTE, this is what everybody wants to look at for the day. Call dominated above and below spot price. Transition very narrow today, unambiguous. So again, above would be positive for the bulls for price appreciation. Inside transition obviously will be choppy, as well as the drunken sailor range, low exposure area driven by the intraday volume metrics, as well as mechanically opening and closing of contracts. And then we see 65.90 down here we've already discussed. We have this small out of the money pocket of put speculators. Again, those that might be tested and may be rewarded pretty quickly at the open if we see some sort of pullback. And then obviously we'll see how we navigate this area. If we do see a pullback, we'd anticipate most likely this to continue to be supportive as we see COTMP there, as well as NGEX, COTMP, historically an area where the out of the money puts become in the money, and you do see some monetization there as spot price moves below those. Most likely these become in the money on any pullback this morning, and we would anticipate or watch for monetization or closing of those, and that would drive us back away from that overall strike. To the upside, 66.20, again, that is PGEX. We see COI up there at 6,700. Again, these people may be disappointed unless we have a significant positive response to the overall news, but we'll see. So getting above the overall drunken sailor range, we'd look for a move up to the 66.20, 25, or sorry, 66.40, 45 level, and then ultimately up towards 66.50, 55, which is COTMC. Out of the money calls go in the money. Again, that would be an area that we'd anticipate some monetization unless we continue to see advancement via the intraday volume metrics, as well as vol command via out of the money call speculation. So again, very narrow today. Net GEX is plus 3,000. So again, we call this a teeter-totter. It's at the fulcrum point where it could go put dominated or call dominated. Expect to move obviously elevated today because of possible volatility and outsized price movements with the news. So again, we'll just navigate the structure. For most of us today, the thesis would be we're just going to wait until the afternoon post FOMC, or possibly not even trade at all today, and get a better handle on the overall structure after the decision, and then how market participants position for the rest of the week heading into OPEX may be a better idea. We anticipate most likely price to just continue to be consolidated, most likely between the overall drunken sailor range, or we may test the bottom and top of drunken sailor range. But as you've seen previously, FOMC events, usually you're stuck within an overall narrow range into the overall event. All right, again, come join us at gameedge.us. All the tools turned on. Click on the newsletter tab where you'll be taken to our Beyond the Bell newsletter that is sent out on the weekends. Put your email in here. It's all free. And then make sure you check out our free courses, which are education courses. Game Edge Fast Pass, our flagship education course, as well as 2 other courses, again, all free, delivered to your inbox. And then if you want to come join us in our Discord, click the pricing tab, 14-day free trial, all the tools that are turned on, extensive trading community, traders from all backgrounds, from former market makers to money managers to new traders trying to navigate the SPX options market. Again, with varying histories and times within the overall market. So I'll hang around for a few minutes. I'd be happy to go over any stocks anybody wants to check out. We can look at the overall trading view this morning. Again, I've overlaid the drunken sailor range as well as our 0DT transition heading into today. As you see, we've already tested P-Trans 6600. Again, key level to stay above, and then 0DT transition levels. We've already tested those multiple times this morning, and we're within the overall drunken sailor range. So anticipation would be choppy price action within the overall drunken sailor range, as well as the transition areas. So we'll continue to watch that as we head in to the open. And then again, most stocks, we'll look at AMD and Rocket Lab. Most of the stocks are at or above the transition areas, as we've seen significantly bullish move to the upside in the overall market. So again, holding above 0 GEX levels, as well as P-Trans, and then moving up towards plus GEX, obviously would be a positive outcome for most of these stocks. And again, same thing with the SPX. We probably anticipate sideways price action into the overall news and FOMC event. All right, let's take a look at AMD real quick. AMD call dominated on all expiries. We did close within transition area, so this could be choppy. Let's look at Friday's expiry. We see PGEX at 165, COI at 200. Obviously, that's most likely out of the realm of possibilities. Let's see what happens after this OPEX. So 170. So PGEX moves up to 170. We do COI drop to 170. So that'd be the upside speculation after the monthly expiry. And again, above transition there as you take out this Friday's expiry. So everything looks bullish with AMD. As long as the sentiment structure stays the same, we'd anticipate possible upside appreciation towards 170. Let's take a look at Rocket Lab. Rocket Lab call dominated, obviously above and below spot price. We're within the overall transition, but you see PGX 51, COI at 50, so upside appreciation could be likely. You guys see a confluence of PGX and POI down there at 45, so that would most likely be supportive on any pullback if you stay above that. You see COTMC there, COTMP there at 46.50. So again, pullback, most likely opportunity to get involved as long as we stay call dominated. You do see some out of the money put hedging here to the downside, and you see Friday's expiry is put dominated. So it looks like maybe anticipating some weakness heading into the monthly OPEX. And let's look up. So then you see the overall structure improve after monthly OPEX. But we do have out of the money puts below us. So still call dominated for speculation to the upside. But we do have these out of the money puts below us. We'd like to see those most likely turn to in the money calls. Again, continue to be supportive for upside movement. So we'll see how that structure continues to play out. But call dominated, so call speculators maintaining overall control within the overall full complex, just isolating expiries after the monthly OPEX. Looks like there could be some overall speculation to the downside for a short-term weakness. Yeah, we'll look at the Chinese stocks. BABA advancing pretty well, call dominated, above and below spot price. We are above PGX and above transition, really heading into that COTMC level. So price appreciation may be dampened a little bit unless we see the structure advance. So structure advancing would be PGX moving up and COI move up, indicating call speculation to the upside. So you see really PGX staying at 165. 170 and see COI continuing to stay below spot price there. So that's indicating call speculation really not advancing significantly higher. So I'd anticipate BABA to probably stay under 170. Sorry, I missed Rivian. Let me look at Rivian real quick, and then I'll go back to the Chinese stocks. So call dominated above and below spot price looks good. Transition area at the top of transition area. PGX and COI at 15, so most likely not a significant price appreciation above 15 heading into the monthly OPEX, and the same thing after the OPEX. So let's look at JD. Yep, all the Chinese stocks call dominated above transition. The main thing you want to look for is if you would join Game Edge is the web app provides you to isolate expiries, so you can move up and down the expiries and isolate those and see if the overall structure continues to advance or does it stay stagnant. So advancement would be looking at the PGX and COI. Does it continue to advance up? And did you see the net delta spreading up and out away from spot price, indicating out of the money call speculation? And also, does the transition area move up and down? Transition area continues to move up. Again, that's call speculation. If it stays stagnant, then the structure is not really advancing. So the probability of price appreciation kind of stays overall stagnant. JD obviously 35 to the upside, COI is 40 there, and we're above those PGX COI levels. And we do have a mechanical portfolio, P-trans to PGX, and once we reach those PGX levels, historically that's where we take some profit. If you do not see PGX and COI advance and the structure really is not advancing significantly, you can continue with your position, but advancement to the upside may be limited. So that's kind of how we look at that. Let's look at the last one, Baidu. 150 call dominated. Looks like some upside left there with PGX and COI to the upside. So 140 is this Friday's expiry. So most likely, I see upside speculation is really is non-existent above 140. So most likely that would be the upper price that would cap price. You see 140 here. Again, not much speculation above 140. So again, probably 140 would be that key metric or key strike area that would contain price to the upside. Let's look at coin real quick. Coin call dominated above and below spot price, above transition. PGX 335, COI obviously all the way up here at 400. Friday expiry 335, so you see PGX COI matching at 335. So upside speculation, that would most likely be the target. post OPEX 350, so you see PGX CY advance. So this is what you want to see for possible price appreciation. You want to see the structure advancing as well as transitions continue to advance up. So everything looks good for coin. Qualcomm, that's one I have not looked at for a while. So we're right at PGX. We're above COI. Call dominated, so structure looks good, but out of the money speculation, upside advancement may be dampened. We do see 180 up there. Okay, so that's calls, puts, COTMC 170. So we're probably pushing the upper bounds of advancement. And then after this OPEX, you really don't see COI and PGX advance much. So this is why you want to look at the web app. These obviously have weekly expiries on Qualcomm and not daily expiries. So after this OPEX, see where this positioning changes and how it changes heading into the rest of the month. Because after this expiry, obviously that money needs to, will most likely be deployed somewhere else within Qualcomm or other stocks. So this is how you click through the expiries and you can see if the structure is advancing. So what's nice is I'm used to this web app, but my eye gets drawn to this as I click through. I basically focus in on the PGX and COI to see if it advances, as well as the white box, which is your P-trans level. And if it continues to advance higher, then obviously speculation to the upside is increasing. Now we do see on out in time towards the end of October, you see PGX advance to 180, but the structure is the OI is only 610. So this is very key, understanding that those options are not necessarily the OI is not significant. So this would not be a good structure to look at to say, okay, I'm going to speculate towards the end of October with this OI. So hopefully that helps. And this also, is a great understanding of what is happening. You see the total OI here after this expiry drops to 8,000. So we'd like to see that increase significantly, which it most likely will after this OPEX, but it's hard to base a overall trading plan decision with this low OI on these expiries on out in time. So we want to see those fill in to see where market participants are anticipating price to go. So, all right, thanks everybody for joining us. We'll try to do a midday recap today, obviously FOMC today, and then the post-market recap. Make sure you like and subscribe and join us, and we'll be notified when we go live. And if we post any more content on X this morning, pre-market, as well as intraday, if we're seeing anything change in the overall sentiment structure and trend. Thanks everybody for joining us, and have a great day.